right, good morning, everybody. Let's go ahead and get started. Want to welcome you guys here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there in the chat box right there to let me know that you guys can hear me and see my screen. Hope everybody's had a fantastic morning. Want to welcome you guys here. Want to give a shout out to those of you watching this on the recording on the website as well. Great day. Love days like today. Obviously, we don't get a lot of days like this, so but when we get them, they're fantastic. So we'll go ahead and obviously go through our routine of going through the overnight trading strategy. We'll go over our weekly trades up to this point, and then we'll make sure that we discuss the divergence scanner. Obviously, that's had a really cool couple of things happen recently this last 24 hours, and then we'll go over the price action trades. I do have one in particular that I want to take before we, uh, get off the call today. So as soon as we can get that trade posted, we'll wrap up. And then we also have a couple of classes tonight for you guys to come to. We got a EA and copy trader webinar tonight, and then we've got a good scanner and COT report webinar to follow after. So good lineup today. Super excited. Days like today are good. The sun's shining. It's awesome. At least where I am, it is shining. So we'll go ahead go through our disclaimer. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your contract size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and pull up the euro dollar. Make sure we're on the same page over here. This is up 2% today. So fantastic, fantastic um, movement in the market. So this is the here is the um, what do you call it? The yeah, I guess the euro from last night. I'm going to pull up the sessions indicator, make sure we're on the same page here. So this was the session last night. It actually, from hindsight, it actually looks kind of like a smaller session. But when you look from top to bottom, the Sydney session last night was approximately, um, if you measure this, let's go ahead and measure this together. Um, um, okay, let me go ahead and measure this. So if you measure from the bottom of the Sydney session to the top of the Sydney session, that was 45 pips, right? Or I guess right there, yeah, that looks like it made a top just barely right there. So that's about 48 or 49 pips right there from the top. And so when you get a range that's over 30 pips, what you got to do is you got to cap your box at you got to cap it at 30 is what you got to do. So all right, and so last night I'll go ahead and put this together here. Um, So this was where the market was, pretty much at the Sydney close, just about right here. I think that was the opening candle. And so what you do is you go 15 pips above the current price, 15 pips below the current price. And then that's going to be your sell stop down there, buy stop up here. And so the sell did trigger for me. I did lose on the sell. I sent you guys a message in Telegram indicating and showing you guys the sell that lost, and then that triggered first and unfortunately lost. But then the buy came into play, and obviously that was pretty good. So really happy to see that trade take off. This actually went more than the 150 pips that takes you to the take profit. This actually went 188 pips in the last hour in that move right there. And then currently it's up 173 pips from the entry last night. So, yeah, I guess it depends. Oh, nice. Lee says this helped me pass phase one challenge. Nice. Staten says whip both ways. I missed it. Take my trade 45 minutes before close. Consistently trade triggered 30 minutes before closing. Oh man, that is rough. I got your picture right there. I see it. Yeah, so looks like yeah, it just depends on yeah, I could see, I think that probably would do it right there. Like if just depends on how you got triggered, like if you had your entry close enough to trigger right there, that would have done it. Um, I was gonna say it's possible some of you used you didn't need to use the 30 box method, because, well, no, that from its low to high, like even right there, that's already over 30 pips right there. So I guess it just depends on how you got in. So yeah, that is rough today to see a day like that. That happened to me a couple weeks ago. There was a day where like almost everybody won, but I lost just because of the time. It was just a timing thing, you know. Um, but yeah, no, that's rough. I That's like so hard to like look at that type of chart right there with a generally pretty crisp breakout and then not get that. So I feel for you today. That's really rough to uh I hate it when that happens. It's not fun at all, especially when you're like that had the potential to do it. So um um so yeah, no, okay. So yeah, anyway, so that's the full box. Yeah, the full box has already hit the take profit. I actually did win also on my Reaper trade and on my half box trade last night too. Yeah, I think it's just a matter of inches. Like I think it was just, well, I mean, I still lost on my cells. Like my cells still triggered and I lost on those cells, but then the I got the wins on the other side of that, and that was both for half box and full box. So yeah, I'll be closing out my sequences today just because I got that win. But yeah, I can see it. Like I can see the controversy today, just because of how it's just a timing thing. Like number one, this was already over 30 pips, and so when you get over 30 pips, what you have to do is you just have to go from the current price, drag up 15 for your buy stop, drag down 15 for your sell stop. So when I went in right here, that's precisely what I did. I just did half box, full box, and then 15 pips up, 15 pips down. So yeah, so we'll talk. Let me fill out the journal real quick, and then we'll have a conversation about that. So Staten says keep going on the sequence, though. Correct. Yeah, I mean it's a tough call because like I mean that's generally the rule, right? Like if you lose and you didn't win, keep going because there's still. And the reason why I would say keep going too is because we've now passed CPI. CPI is over. That was this morning. We passed FOMC yesterday. That's over, right? And so the chance for a breakout move is more likely to come in the next couple of days. Like if I had to bet about tonight, like tonight I feel way better about a breakout happening than I did like on Tuesday night or than I did on Monday night. So like I would personally say keep going. If you didn't get your win today, I would probably say keep going, but it is up to you because now for those of you that lost, you have to go up to the next step in the multiplier, and that's not fun to do, but it might be exactly what you need to get your money back, right? I mean, even last night, I'm on a day 4, and sometimes it feels like, oh man, do I want to go to a day 5 or day 4? I'm on day 3 and I just lost both ways. Do I go to a day 4? Yeah, so I think it's good to continue your sequence because if you do that too many times where you just give up on a not give up, I don't like that word necessarily, but if you decide to make the decision to return back to the 0.25, then you're just kind of left with a bag of losses, you know what I mean? And so it's like, oh dude, but when you had a chance you could have gotten a win, and you still have 2 more days. You can go to a day 5 tonight, and then you can go to a day 6 on Sunday night or Monday morning if you need to. So okay, so let's go ahead and fill this out. So for the full box, I had about a 29 pip stop loss, or let's see, let's go ahead and do this first. So I had my sell that triggered first, 29 pip stop loss, and that lost the 29. And then I had a buy that triggered right here, it had a 29 pip stop loss and it made the 150 pips on it last night. So that was um, really good, obviously, for those of you that were able to get that full box win. Okay, so I'll go ahead and mark that in green. This one will get marked in red. And then for full box, I think a lot of you had the same result. Just, I guess it depends on when you set it up. Um, but yeah, I'll be returning to 0.25 tonight on my multiplier there for the full box right there. So if you look at today's win and then you took also today's loser, because obviously I lost on the sell side, and if you sum all that up together, that's a net total of $1,188. So that sequence started on the 7th, which was the beginning of this week. So I had losers every single day this week. I lost on Sunday night to Monday, lost Tuesday, lost Wednesday, and then that's it. And then today got the win, and then that win covered the subsequent loser on the other side, plus all of the losses here. So that's a successful. That's not just a successful sequence, like as far as like, oh, I got my money back. It's like not only I got my money back, I got my money back plus, right? So that's this is kind of the ideal situation. This is kind of what you want to happen every 3 or 4 days. Just a couple of days of back and forth losses, and then you get your big win. That's kind of the hope every single time. This is actually on my end, this is the biggest win I've had on the full box since the last time I had a win this big. You actually have to go back to um because I got a lot of $1,000 wins, maybe $2,000 wins. Like here's a $2,100 win on the January 20th. And then here's a $3,000 win, but that was also the last day of trading day that we had in December. So this year that I don't think I've had a win that big on the full box. The reason why I think that works so well is just because um this thing went full target. Like when I woke up, this was well when I woke up it was almost to the target, and then it finished the deal just about 2 hours ago. So within the last hour or two, that full target hit, and it was also on a day four. And so that's precisely how you can get, that's the recipe that kind of created that huge win right there. So okay, so great. So that's the full box. Half box, like I said, I did close out as well on my end. Oh, this is an example that I did from yesterday. Let me go ahead and put this together. But like I said, I would say keep going. Again, like I'm gonna just kind of re-explain that concept. But yeah, I've personally noticed that if you have breakout days come in sequence as well, just like losing days can come in sequence. And so, and we're also past the news event, like the big news event is over for the week. And so, my suspicion is that you're gonna see, um, my suspicion is that you're gonna see a nice um, breakout win tonight again. I don't know that for sure. I don't know the future, but based off of how it generally plays out, that's kind of what I would suspect. So, okay, so I'll be returning back to 0.25 tonight. If you lost today, then you'll go back up to day five. Let me get that marked up. You'll go back to you'll go up to what is the 1.29. If you lost, you go to 1.29 on the multiplier. And then if you won, you'll go to 0.25. Uh, yeah, and congrats again, Lee, for yeah, that's awesome. We don't normally see you in the morning call, so that's awesome to see you here. And yeah, congrats on your phase one passing last night. That's great. Um, Paul says we need Biff's book from Back to the Future. Yeah, it's funny. Last night I learned one of my friends actually. showed me his like scorekeeping book for baseball, and it has MLB scores that he it's like a book he took to baseball games in the late 90s and early 2000s. And so he was showing me like all the scores he kept and stuff. It was a lot of fun, and so it's just kind of fun because you look at the score. If you've ever seen one of these before, like it's like it has the exact plays that were played out in each inning in the baseball, and so you can almost envision exactly how that play happened, even though it's just on paper. So it's kind of fun. Okay, cool. So, yeah, that's pretty much it. Oh, yeah, and then Reaper. Let me go ahead and close this sequence on the Reaper. So it's the same thing. Um, if you didn't get a win on the Reaper, I think you can keep going. By the way, just because, like I said, I think there's probably another breakout on the horizon, and then um, the other reason I'd say you can keep going is because you're just on day one of the Reaper today, right? Um, so, oh, actually need two rows here. Sorry, I just realized I need two rows. Yeah, I think you could keep going with the Reaper. Okay, so this was uh, a sell that triggered first, 15 pip stop, and that lost. And then this one was a buy with a 15 pip stop, 175, and that was 0.5%. Zero right there. So I'm going to mark this one in green. So this is kind of nice with the Reaper here because it's like it had one loser last night, but then it had the one winner, and so it didn't have much of a loss to deal with here to recover from. So this is actually more profitable today than even the full box and half box, just because it didn't have those losses to deal with to get to the Reaper, which is kind of nice. I do like it when the Reaper wins on like day three or day two or day three, just because the profits do get a lot bigger. But this is still great. Very happy with it. Okay, so I think that's about it there. Here, let me go back to this. Let's take a look at the news so you guys can be aware of what's going on for the rest of the week. So obviously we've passed all the big fat news events. So we had CPI this morning, we had FOMC yesterday. The tariff news seemed to have taken a you know a good turn as far as like getting them all settled down, which is good. Um, the markets just don't like uncertainty, right? Like that's the big thing, right? So yeah, we passed CPI. Obviously, that's already over today, and then tomorrow there is some GDP news on the pound, and then that's basically it. Like I wouldn't worry about any of those other news events. There's no other schedules talks from Powell or Trump, so that's good. So that's why I'm thinking like you might see follow through moves that are just not so whipsaw in nature. So that's why I'm hoping that tonight's a good night for breakouts, and then possibly Sunday night if needed. Um, Yeah, and then beyond that, you look at Monday and it's like, okay, well, we've got a central bank meeting in Australia on Monday, and then, um, yeah, and then you got your CPI on Tuesday for the CAD. So those are kind of what's coming up, but we've passed a lot of the big stuff, which is good. So, all right, guys. So I wanted to show you. So let's take a look at. Glad we closed half of our weekly trades. Although I was going to say um the let me actually pull up the weekly trade account. Yeah, because there's a couple of trades that are still positive right now. A lot of the Aussie pairs have closed out. But yeah, a lot of the yen pairs continue to do well. Like if you look at the franc yen, this is a trade that we bought last week. This is a signal, but on top of it being a signal, this is also one of our this is one of our weekly trades. Okay. Yeah, um we're gonna get to the NZD franc in just I'm saving that for last actually. So we're gonna get to that in just a second.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Yeah, that's definitely one of my hot currency pairs right now for sure. So, but I'm saving that for last. All right. So here's the franc yen. I'm super happy with this trade, obviously. That's about as good as it gets, guys. I just can't even believe we got in right there. So that was on April 3rd. So we've been in this trade for 7 days now. Um, and we're currently up on this trade from where we got in. It's 500 529 pips on a price action trade. So I'm super excited about that. And yeah, I do think we're definitely going to get to our take profit. We've already closed out half of our position for like 384 pips. We're leaving the other half to ride. This is precisely why we leave. We don't want to close the whole thing, right? Because if you close the whole thing, then it's like, oh man, I you close too early, you know what I mean? So we want to make sure that we let some of these trades really kind of pan out so that we can get as much profit from them as possible. Not every trade you get to, run like this. And so we want to see if we can get as much out of that as we can. So um so yeah, over 500 pips on one trade, 7-day hold, price action trade and a weekly trade. So it's fantastic. Just love that. So um I like to look at trades like this and look back and see like why did we do so well on this trade? Like what did we do that just, where and a lot of it to me is just like I don't know if we did anything different necessarily, but what we did here is we found a nice break of structure. This was a strong buy on our scanner, Steve scanner specifically. We had a lot of bank data indicating that the banks were buying this pair. So the fact that they were structure breaking on the hourly time frame from a trend line, and then subsequently we were looking for a pullback back to this demand zone. I think that's all. I mean, that's really just as simple as it gets. Um, I'm really happy with where we put our entry on this because I thought about it and I thought if we had gone much lower, like if we had looked for an entry beneath that low, we would have missed this trade entirely, which would be an absolute tragedy. So that's something I'm just trying to keep a mental record of like, okay, in this particular instance, the market tapped into this liquidity right there, that little um, whatever this reversal is right here. It looks like the market really liked that area, and the market went right back down to that and triggered us in there. So I'm just trying to kind of keep a mental note, like, okay, we need to make sure that we include that when we're looking at other currency pairs today and in the future We got to make sure that we include all the liquidity zone, not just kind of like, I mean, you can get really specific with which demand zone you want to use, but this entire thing is demand. Like this market could have gone lower and then gone up, or it could have just done what it did and just barely tapped in to the initial zone and then went up. Um, so so let's see. Muhammad says most of our trades we rarely even get close to the stop loss. Yeah, I mean, and then some trades like we had, let's see, what was that one trade we posted that just lost? Oh, it was the NZD Frank trade. It lost just right away type of thing. So, sometimes I think we either just lose quickly or we just tap in. And so maybe that's something to be said about maybe bringing our stop loss up a little bit more on some of these. But I wanted to make sure that we included the entire demand zone. This, when we did our analysis, I think there were several order blocks in this area. This was over a week ago, so I don't remember everything that we did. But I think we were trying to look at all the different major blocks in this area. And so we said, okay, let's just make sure we include that. Okay. So yeah, I think it's a good thing to go back and check. Even with your losing trades too, you want to go back and figure out, what could we have done differently. But yeah, this was a limit order, so I'm also making a mental note of that too. Limit orders are fantastic. I love stop orders for getting into more breakout opportunities, and typically stop orders get you in the right direction. But at the same time, limits can be just the right thing to get you into a springboard opportunity like this, where it just takes you to the upside. So I'm really, really happy with that. Okay, so we're just going to leave the rest of this trade to hit the target. I do want to go to the rest of the way. We're not asking the market for much more. We're already up 523 pips, and we've got another, 60 or 70 pips to go to hit the full target. All right. So I think that's about it on that one. Let's go take a look at here. Let me pull up Telegram here. Make sure we're on the same page. Um, yeah, we closed out this dollar yen trade. I'm kind of kicking myself that we didn't get into this particular trade. Um, oh, would this have triggered? Let's see. Did we have, where was our entry on that dollar yen? We had a sell limit at 148,286. We canceled this yesterday, 148,286. Oh man, I don't know about that. That could have been, that could have triggered. I don't know. Anyway, that's a good, I don't know. But the thing is, I didn't want to be in it anymore. If I didn't like this because it had already gone down. I was hoping that this was going to go up first and tap. So basically, there's a massive fair value gap just stuck right inside here. And so our thought was, hey, if the market goes up into that, we'd like to sell in that area. And it looks like we may have gotten in if we had stayed in that trade. But some of you indicated that you made money on your dollar yen sell, and that's great if you did. But I'm I'm not too worried about it anymore. Obviously, we're moving on to different trades, but it looks like we may have been able to make money on that. Um, I just didn't want to take the risk of this coming all the way back up and then continuing up. And so obviously it's hindsight type of thing, but we'll move on from that one. And I think, yeah, I think it's just the franc yen. And then we didn't post a trade yesterday. We just had commentary about FOMC. So let me show you the trade I'm thinking about taking. So let's move over to, let's talk about the scanners and some of the signals that are coming up. So here's the NZD franc. If you look at the price divergence scanner, okay, so first of all, we talked about this yesterday. The banks are losing a bunch of money on this NZD franc, right? Like we know on the price divergence scanner that they're definitely losing money. And so they bought a bunch of positions back over when it was consolidating over here. And obviously the market just took a really big dip over here. Yesterday during FOMC, this thing took off about 3%, just really fast. It even went even higher last night. It's pulled back this morning, but it even went higher there. So basically, what you've got going on here is you've got like a structure break right here. This was a support or resistance zone, and we broke that right there. We're currently coming back, which is okay. Like that's normal to see it pull back like that. I actually have my suspicions on where this may go. So I'll show you what I'm thinking there. But basically, these banks got a lot of, they were able to get a lot of their money back on that move. So this thing went up a total of, from its low down here to its high right here, that was 246 pips in less than 24 hours, right? So I'm sure they loved that, because they were losing a lot of money on this trade. So I think the reason why you're seeing a lot of pullback right now is just banks, these are banks that are they're trying to fix what they did wrong, because they bought all these positions back over here, and as this thing collapsed, this is them trying to get their money back. So if you look at the price divergence scanner, this currency pair, it looks like it's back to 28. It was up to a 29 ranking, which basically means that the banks are just so off from the current price of the market. At one point, this actually got to 24 or 23 yesterday, which means that that market went up, because if that means that the ranking's coming down and that this thing is not ballooning as much as it was before. And so, um, because what happens here is when the price divergence is out of whack with the what the banks are doing, this is going to create a very large number. Anything that's typically around above 14, 15, or 16 is probably going to be considered or classified as a strong buy or strong sell. And this is way out there. So, like I said, the banks are losing quite a bit of money on the NZD franc right now. And so that's why we've been pushing the NZD franc, narrative to potentially buy it. So just as a few reminders, though, this low that was formed yesterday right there is an all-time low on the NZD franc. So anything beneath that low, we don't have any record. There's no record of the market down beneath this area. So there's no order blocks down here. The only thing that there is down beneath this low is potential liquidity. So you've got retail traders that possibly have stop losses beneath that. And so those are always fair game. The markets the banks can go beneath there and try to grab that liquidity if they need it. So right now, based off of what the scanner's saying, I'm still looking for buy opportunities on this. I do think it's going to continue back up even after this pullback right here. If you look at where the demand zones are, obviously this has formed a fair value gap. Okay, so what is a fair value gap? What happens with a fair value gap is the market has a move straight up or straight down, in this case, straight up, in a 15-minute candle or hourly candle right here. And so these often get filled in through what we call a fair value gap, right? And so the markets will come back. And do you guys know how to do this? So basically, what you do is you draw your candle that's basically straight up, and then you draw the market to the left side of the market, and you try to find where most of the liquidity is. And so when I draw this, I'm like, okay, my eye's drawn to like this area right in here, because this appears to be where the liquidity is right there, because that's where the market found a support, reversed, found support, reversed, found support, reversed, right? So that would be liquidity. You also have this area down here. I may actually want to bring this down just a little bit to include that liquidity zone, but um yeah, so something like this would be potentially a buying zone. And you could actually put in an entry, and we're not too far away from that actually. You could do a price action entry, limit order type of thing, and you could get in like this, and then you could try to take that back up to the original price. So I'm trying to take the NZD franc at some point back to 0.500, which is right there. I'm confident we're going to get back to 0.50. That's a extremely significant figure level right there. And so that's the goal is to get to 0.500. I don't know exactly when we're going to get back to 0.500. I think it's going to be in the next 1 to 2 weeks, just based off of the price divergence scanner. Um, and so, that's the game plan. So this is probably the best limit order you could take. Something like this is probably pretty good. You might be able to bring that stop loss up a little bit. If you can bring that up, that really strengthens your RR ratio. If you can, go with something like that. That's a 1 to 3.5 RR if you can get that. We might take that trade just because of how good the RR is. Now, let me just propose another idea. So here's another trade opportunity because I want to make sure that we get into a solid trade if we're going to try to take this with the banks back to the upside. So we could wait for this to finish going down because obviously it is going down right now. It's kind of it's reversing back to this liquidity zone. So another way to trade this is just to do another re-entry buy stop order. So what we could do is wait for the market to kind of come back up to some of these candles this morning that were formed right here. And we could just wait for the market to come and break above that line. If we break above that line again, then we could get in on a buy stop type of thing. And then we could see if we could run this back to the upside. So something like this would also work too. And if we went with that, that's a 1 to 2. If you wanted a 1 to 3, you would need to put your stop loss right there, which we might be able to get away with. I think the 1 to 2 is very likely that you'll get away with that. Um, yeah, so that would be more of a surefire trade. The other nice thing about the stop order is if you place the stop order as a price action trade, the nice thing is you'll miss out on, like, if this decides it wants to keep going down, then you could potentially miss out on this going the wrong way. Um, um, so, like, so that's basically the pros and cons there. So you can go a stop order route and potentially build back as this starts to climb again. That way you can get in on the way up, or you could take a little bit more risk and go with the limit order. As far as, like, if you went with this, the risk is that the market just keeps going down for a little while before it starts to come back up. And if that happens, then you could stop out of this trade before it goes in your favor. So the RR ratio is a lot better if you do that. So if the trade taps in and wins, yeah, you'll make more money if that happens. If the trade if the market taps in and then just keeps going down, then you'll just, you're out of this trade. Unfortunately, you'll have to take that loss. I think it'd be good. I do want to make sure that we secure wins this week. Um, I- will let you guys decide if you want to do it. This is a great limit order. So if you want to go with that limit order and get the high RR ratio, I'll let you do that. I want to just make sure that we secure wins this week just because of where, like, we had our trade with the we had a one trade that lost, right? And so I want to make sure that we cover that. Obviously, the Frank Yen's been helping, but I want to make sure that any future trades we take just kind of add to that stack, right? So I think I am going to go with the buy stop order right here, just to ensure that we get triggered in if it in fact breaks to the upside. And then, like I said, we'll take profit at basically 0.50. So right there, as close as you can to 0.50, and then we'll keep a stop loss of around a 1 to 2. So right there. And that works great. That's a great little stop order. That gets us in if the market starts to break back up. And it helps you avoid any future drawdown to the downside. Um, let's see. Paul says, I'm curious to know why you think it did such a massive pullback when the divergent scar was still 23 when the London Open. Yeah, I really think the banks abandoned ship. Like, I think that's what they did. I think a lot of them were losing so much money on the, I think they were losing so much from their buys over here. We know that they bought over here. Obviously, that's what the scanner and COT data tells us, and then this thing came down, and then that's what created the signal on the scanner as this came down. And so we knew that a move to the upside was imminent, and so that's why the market went up 257 pips yesterday. It was just, this was the banks trying to get out of this bad trade that they took. So this move right here was them obviously getting their, you know, recovery, but I think a lot of them just, as soon as they saw that move, I think a lot of them got out. So I don't know if necessarily a move to the upside is like again is like a surefire thing because I think they kind of got their move. That's kind of the I think that's what they were looking for. You know, they recovered in just 24 hours more than 50% of this pullback, right? So this pullback was from its highest high there to its lowest low there. That was a total of 456 pips, and they got 257 of those pips back in like less than 12 hours. And so I think that was just like such a great move to the upside that I think a lot of them took profits off the table. And I think that's why you're seeing it pull back. And with that said, though, I still think we're getting back to 0.500. So 0.50, I think you're still going there. I don't know exactly when it's going to happen. I do think that there's still banks that have buy positions that they need to get rid of. And I think this is just the initial pullback after their after so much sell. Well, they got out of their buys basically. At least a bunch of them did, and I think that's kind of why this is pulled back because they were in such a dire situation. Um, but I still think that that's going to go back up. I just want to make sure that we get in on it if it breaks up. Like if this wants to keep going down again, I don't want to mess with it too much. I only want to get in if it starts to break back up, and I'll kind of play it that way. Um, yeah, so I think that's just what happened, Paul. I think they had 257 pip move, and they were like, "Gosh, I got to take some of that off the table." I think they took a bunch of that off the table, and that started to pull back there this morning. But with that said, we're coming into an area right here where I anticipate buying pressure. And it's very possible that you see, like, if you've got some trades on here right now, it's very possible that you see the market dip into here. And then I think you'll see it actually start to come back up and retest this area. You might even see in the next 4 or 5 hours today, even, it's possible that the NZD franc finds a place to hang out right here at resistance. Like I think that's on the table today too. So this could go back up another 50 or 60 pips by the end of the trading day and just hang out there until the end of the day. In fact, it may even go to our buy price. It just depends though. Like I said, I'm curious to see like because right now we got a sharp candle to the downside right here. I'm just curious to see um if they get us into I'm wondering when the buyers will come in and buy. And I think around this area is where they're going to start really buying. So I'm tempted to put that limit order in there. But like I said, as far as the group goes, I'm going to put in a buy stop order up here when this starts to break back up. So, okay, great. So we'll do that. Yeah, let's do a buy stop together as a group. And I think that will be really good. Let's see. I just wanted to label this again, make sure everyone's on the same page here. And then I'm going to post a signal on this pair. Yeah, so this will be a buy stop order. We actually did a buy stop order on this pair earlier this week. So we are trying to do it again. And then obviously if you guys want to, there's a pretty good limit order opportunity. Um, yeah, there's a pretty good limit order. Just the downside with the limit order is just if the market keeps going lower, then the limit order loses pretty quickly, but you'll get a better RR ratio if the trade works out. So this is going to be, like I said, a buy stop. So a buy stop is a trade that will trigger if the market goes up to a certain price. Okay. So we're only going to buy if the market starts to go in that direction. If it does not go in that direction, the trade just does nothing. It just sits there and it sits there pending on its own. It doesn't do anything, right? So our pending order is going to be at 0.48081. We have a take profit at 0.500. So you can just what I'm going to do is just 0.500 uh 002. That's just what's on my chart there. So that's what I'm going to put in. And then my stop loss is at 0.47125. Take profit on this trade is 192 pips, and we are risking a total of 90. Well, if we round it, it's 96 pips. So 96 pips of risk there. And again, this is a buy stop order. Cool. I like that. I think that'll be good. And then we're getting really close. Like for those of you that want to take the limit order and kind of be a little bit more risky here, this is a good area. Um, like I said, my biggest concern with the limit order is just if the market wants to make one more low, like if it wants to go beneath this one more time before it goes back up, it could definitely do that. I'm not saying it will, because I also could see a scenario where the market actually just kind of comes into this area right here where it's at right now. And I think you could see a pretty major move back up today to there. I think that's also on the table too. It just depends on, you know, if the banks want to pick up more orders down here after their pullback, which I kind of think they will, but we'll see what happens. I just want to be a little cautious there, so I'm going to go with the buy stop order instead of the limit order on this. I've kind of learned with these, just one last thing, with these types of trades where the market's at like all time lows or all time highs, you got to be a little careful with the limit orders just because. Um, when the market's at an all-time low, it often makes another low. If the market's at an all-time high, it often makes another high. And so the limit order, uh, if you have your limit order around surrounding a liquidity zone, that liquidity zone may not work necessarily. So that's why I've kind of gone with the stop order approach when you're trading a pair like that. So gold is doing that right now. Like it's at all-time highs and then it makes another high. Yeah, yeah, pretty common stuff to do. Um, So that's yeah. So anybody who's placing limit order sells on gold is getting toasted right now. Um, yeah, yeah, absolutely. Now you have to play the stop route, the stop order route, when you're trading that kind of stuff. I think so. All right. Yeah, like I said, good class today, and then we have good classes tonight. I'm gonna show you guys how to set up a copy trader to manage multiple trading accounts with Copygram tonight. I'll do a demo on Copygram. That'll be good. That'll be at 8 p.m. Eastern, and then right after that at 9 p.m. Eastern, we're gonna do a COT report and scanner call and talk about the some more scanner signals and talk about next week and what big trades are happening. We'll probably talk a lot about the Sensity Frank too, probably tonight in that call. All right, guys. Well, have a fantastic rest of your day. Thank you for coming, and we will see you guys in the next webinar.